just the same title. Good morning. Nice to see so many people in person, that we don't need to speak to screens, but that we can speak to people. Fantastic, and that we can have also, I think, at the end, a good interactive debate with all of you. A very interesting issue, very good for S&D to have organized this session. An issue which has been debated in this town for many months now, but very polarized views. I mean, it's extremely, sensitive issue. We've seen there are many letters already been addressed to commissioners on the subject, many articles. So I think this debate should be a useful contribution, or this session should be a useful contribution to this debate. And I hope, let's say, we can also hear then, as I said, your opinions after that. I think we have a fantastic panel, but we'll first start with Jonas Fernandez, who will give the opening speech. Eero cannot be here. Unfortunately, Eero is sick, but Jonas will step in, or Jonas was supposed to be here as well. But also everybody knows Jonas. He's following the banking file very closely as rapporteur for the banking package. Of course, one of the key distributors are the banks, and you look at this from that perspective as well. So that is certainly interesting. And then after that, we have a very interesting panel. We have the Commission, Marcel Haag, who just said to me he cannot say too much, but we will certainly listen to his words very carefully. We have Hanzo van Beuzenkom. Fantastic that we can have Hanzo here, a key supervisor in this domain, and certainly to speak about the Dutch experience. We have Monique from the Consumers Organization, very well known in this town, Monique. And then Nina Schlinder, who's been working in the banking sector in many different banks, for the cooperative banks, but before that I had already forgotten about Commerzbank, but also for Deutsche Bank, so she can certainly be very representative to speak for the banking sector on the subject. And as I said, afterwards we can have an open debate. But let's probably start with some kick-off broader ideas from my side. You may have seen, let's say, we at CEPS, an independent think tank, so we don't take sides on this. I published a paper, but we also were involved in the study which was done for the European Commission together with Kantar on inducements, which was published in August last year, which is a very long, in-depth study with plenty of data, but which has in fact plenty of information, and which I tried to summarize a bit, kind of the outcome of that study in this report. But the broader picture we have to see, which we tried also to say, is first of all, Europe has an enormous gap in savings for the old age. Of course, there are some countries, certainly in the north, which were very well prepared. But if you look at the south of Europe and the east of Europe, we are very unprepared. So there is a big problem. If you combine this with aging of population, insufficient saving for the old age, certainly in a context then of inflation today, where inflation of 6, 7, 8%, which reduces your value of your deposit because most of the money of European citizens is kept in deposits with the bank, you have a problem for the old age. The second problem which I see is a hugely fragmented market. I mean, fragmented market in the sense that there are huge differences in consumer preferences in European markets, which has, of course, a bearing then on costs. Cost of funds in Europe. Just because we have such a fragmented market, we cannot pool our savings sufficiently in big pools of assets, which, and of course, then once you manage to pool these assets, have lower cost. The data, for example, is very easy. The average size of a fund in Europe is 300 million. It's 1/10 of what it is in the United States. And of course, if your fund, the larger the fund, the lower your cost, because you have some fixed cost you cannot reduce. Combine this with fragmentation, also fragmentation of operational structures. Think about clearing and settlement systems, which are very fragmented, continue to be very fragmented in Europe. All adds to costs. So just keep this in mind when you hear these debates this morning. And then I hope, let's say, we can have an interesting discussion at the end. But I will start with Jonas to give the opening talk for this interesting hearing by the S&D. And welcome again. Welcome, Jonas, and welcome all on panel members. And again, as I said, fantastic to see so many people in person.
Okay, good morning. Thank you so much. Thank you so much of all of our guests and of course all of you. It's a pleasure to see again this parliament full of people after many months, yeah, during the COVID where we had all of our meetings by the PC, but finally we are able to recover our normal life. And first, I would like to apologize because our colleague Eero is not able to attend to this meeting. As our colleague said, Eero is sick in his country, and I would like to congratulate him for organizing this event because it's clear that there are aptitude to discuss on this matter. In any case, Eero shared with me some notes that I would like to read it. Yeah, and first, welcome, of course, again to our esteemed West colleagues, audience, to this event concerning the upcoming European Commission's retail investment strategy. This long-awaited strategy from the European Commission will assess how investor protection rules are working for consumers in the European Union. Its aim is to ensure that retail investors can invest into financial markets with sufficient confidence and trust. Channeling more private savings into the economy is absolutely needed, given the challenging investment agenda the EU is facing in the coming years. Clearly, the EU retail investment strategy, is a worthy wall which requires close scrutiny. One of the central issues of this retail investment strategy concerns the topic of inducement. Inducements are benefits or commissions that are paid by third parties to advisors for recommending their product to clients. There has been a long concern in Europe, stemming back from the original MiFID II discussions a decade ago, that inducements payment by asset managers and insurance to financial advisors can lead to biased advice that is not the best interest of retail investors. Since the original MiFID II discussions, there is now even more overwhelming evidence that inducements do lead to conflict of interest that have a clear and negative impact on the quality of advice delivered to consumers, with higher cost investment products routinely recommended by advisors to consumers for the higher commissions payments they generate. All these studies and evidence are clear. Products on which inducements are paid are, on average, about 24–26% more expensive than investment products on which no inducements are paid. ESMA also estimates that ordinary retail investors pay, on average, 40% more than more knowledgeable professional investors when investing into Europe's capital markets. The CEO of a German private bank stated recently that German retail investors pay annually almost 6 billion more compared to retail investors in the Netherlands, where abundant inducements exist. And finally, the results of the study at the University of Regensburg last week are pretty clear. Households in countries with a ban on commissions can have a close to double the amount of wealth compared to households in countries without a ban after 40 years. These numbers are clear. Financial markets often don't work well for consumers and savers in Europe today. Indeed, according to a recent European Commission scoreboard, the retail investment market is therefore considered as one of the worst performing markets for consumers in the EU. Earlier this year, in front of the Econ Committee, Commissioner McGuinness opened a healthy debate on the topic of inducement, saying that we need to ask ourselves whether commission-based models really works in the interest of retail investors. During her confirmation hearing here in the European Parliament a few years ago, Commissioner McGuinness also made an important promise. She will put people at the heart of the financial system. We, Socialists and Democrats, fully agree with the Commissioner on the importance of having a healthy debate, in particular around the need for an inducement ban in the retail investment strategy. Unhealthy debates cannot be done in haste, must be done in public through the ordinary legislative procedure. All, or as we will discuss by the esteemed panelists present here today, there are very good reasons for the European Commission to go for a full ban. In the Netherlands, inducements were banned following the global financial crisis, and financial advisors can no longer receive inducement payments and are required to charge an upfront transparent fees for the cost of advice to clients. The result: the level of trust in financial advice has improved, the quality of financial advice has improved, there has been a shift towards advisors recommending less expensive products, resulting in a better value for money than retail investors and improved returns. And finally, more diverse products are being offered to consumers, including ETFs and index funds that often don't pay out commissions to advisors. Despite these clear facts, recent letters from some people keep defending this unsustainable inducements model. The line of defense of those in favor of inducements can be summarized in a few words. Bank branches will close down, banks could lose money, and investors will not receive advice. However, as we wrote in a letter to Commissioner McGuinness last month, it's clear that none of these arguments step up to closer scrutiny. Moreover, it's hard to understand why those politicians who are always calling for markets that are more competitive are afraid of it. In a fair and free market, financial advisors will choose products not for the commission payments they generate, but for the quality of the investments products offered. Let free and fair competition play, and it will ultimately lead to better value for money investments products and attract more retail investors to remain invested in capital markets. Finally, you cannot keep complaining about the lack of private investments in the European Union on the one hand, whilst at the same time keep defending an unsustainable business model based on inducements, mainly discouraging retail investors. Colleagues, only 1 month ago, the presidents of the European Commission, ECB, Council, European Investment Bank, and Eurogroup were pretty clear. We need a capital market union that channels Europe's vast savings into tomorrow's engine of growth. Deepening the capital market union requires a collective effort involving policymakers and market participants across the European Union. It requires courage and openness to change. Given this statement for the presidents, it's high time for this Commission to tackle the poor quality of financial advice and put the general interest of millions of savers above the individual interests of some institutions and present an ambitious proposal with a ban of inducement in line with the evidence it offered as suggested by Commissioner McGuinness. This cannot be that hard and will be fully consistent with the line taken by the European Commission in its MiFID/MiFIR proposal, where it bans a particular type of inducements. I am talking on PFOF, for which there was a clear majority in the Econ Committee. With this statement in mind, I think it's high time for a serious debate about this important topic. Therefore, I look forward to the panel today. I am happy to pass the floor to Karen Lanoux from the Center of the European Policy Studies. And finally, I would like to insist in our gratitude for your participation, of course, for our guests. And I am sure that Eero will be following the debate from home. He's sick, but he's fine. And let's see what kind of conclusions we are able to have. Thank you so much.
Thank you, Jonas. You're staying with us? I mean, that
Yes,
you
yes,
can
yes.
participate in the debate later. Very good. Thank you for this opening word. Very clear statement, which is, of course, one political group in the European Parliament. We know there are others and other important ones as well. So we'll certainly hear about this in the debate further. But it's very good that we have Marcel here. Let's say that we can probably have a tip of the veil, let's say, which will be unveiled now, let's say, what the Commission will do, because we're all very curious. We have been hearing about this now for months, but I also would add that this has been announced for years. I think this strategy is probably 2 years overdue. We need to have it, and of course, then you wonder, let's say, what can still be done within this Parliament, which is kind of in 1 year is back for a re-election. So, Marcel, fantastic that you can join us. For those who do not know, Marcel is director in DG FISMA.
Yeah, thank you, Karel. Indeed, the retail investment strategy is envisaged for May, and that's also put some restraints on me as to what I will be able to say about a future initiative, what is still a future initiative of the Commission. Karel is right in mentioning that it has taken some time for us to move forward and conclude on and be close to the conclusion of this file. But it has to be said that it's a difficult file. It's a politically difficult file, where you have very strong and divergent views from stakeholders, and the discussion around the inducements over the last couple of months, I think, have shown that very clearly. But it is also technically a very difficult file. We try to come forward with a coherent package that stretches over a number of legislative texts, MiFID, IDD, PRIPS, etc. And we are, in fact, also not trying to ensure coherence of the new elements that we are proposing, but we are trying to, at the same time, also reduce overlaps and making the different instruments as they currently stand more coherent. So bottom line is, it's important for us to get it right, and this has taken the time that it has. We've been looking at a wide range of issues along the entire retail investor journey, and that includes financial literacy, disclosure, suitability and appropriateness rules, inducements, value for money, but also enforcement aspects, which we think are important in the area. We have gathered thorough evidence from many different sources, and we've also consulted widely. We asked the European supervisory authorities for their advice. We've spoken to many stakeholders, also with the member states, and also with different members of this House. As a result, we identified a number of areas where we have concerns about how the current rules are working. And let me name 3 in particular. Firstly, retail investors who are consumers may not always read or fully understand the information that they are provided with. Disclosures are complex and they're not sufficiently engaging. And they're also not necessarily adapted to the digital environment in which they are increasingly consulted. And secondly, retail investors often receive biased advice and are not offered cost-efficient products. And thirdly, not all investment products offer value for money. Now, without being able to tell you what be exactly in the package, yes, sorry. I can tell you that we are looking at a number of issues. So we want to look at how we can ensure that consumers can take well-informed decisions, how we can make sure that consumers get good advice, and how it can be ensured that only products that provide value for money are put on the market. When we are doing this, we also need to take into account recent market developments, and for example, increasingly social media are being used for marketing. And here the rules may not be sufficiently clear, and also the supervisors have challenges in monitoring the new forms of marketing communications. So we are looking at options to remedy existing shortcomings. Looking at how to make disclosures more engaging, how to ensure value for money, and how to ensure that marketing on social media follows the rules. Obviously, a key issue that has sparked the strongest debate recently are inducements. And even though there is an obligation to act in the best interest of the client, set out in MiFID, MiFID does not foresee a full ban on inducements. It provides for a ban on for independent advisors and for portfolio advice, but beyond that, inducements are possible, provided that they lead to quality enhancement and they do not affect the general obligation to act in the best interest of the client. So we see that inducements can create a conflict of interest, and that they can also lead to advisors offering more expensive products to their clients. We have also seen that in the Netherlands and in the UK, a ban has helped in shifting the market towards simpler, cheaper, and better value products. But we are also aware of arguments around the disruption of the market and on a risk of an advice gap. We are assessing all of this carefully, and we will come forward with a proposal in the coming weeks. And to conclude and to be very clear, our intention is to put the consumer at the heart of the retail investment strategy.
Thank you, Marcel. That's, I think, what we need, because, as I said, we need to have much more, as also Jonas was saying, money to going into investments. We need to finance the green transition, digital transition, and we can be speaking about this, but if the means to do this are not there, or there are important impediments, that is important and should be addressed. I mean, thank you also for addressing very clearly, which I personally do not fully understand, why we can't do it under MiFID today, but you address this. I mean, it's apparently not clearly interpreted enough, or say the interpretation by a supervisor can be different, and that's why it's very useful that we have Hanzo to say, let's say, why the Netherlands has gone the route they have, as you explained already. But also, it's not only the Netherlands, there is the UK, there are other countries which have done it in different ways by a much more hands-on supervisory attitude. So fantastic, Hanzo, that you can join us. Hanzo is one of the directors of the Dutch Markets Authority, which is a large market authority, I think one of the largest in Europe, which basically controls conduct of business rules by financial intermediaries. Hanzo.
Thank you, Karel. It's great to be here, and for me, it's personally important to be here. And I will tell you at the end of this story why it's so important for me to be here and for you to hear this message, because I think it's an important message. Let's start with the slogan of the retail investment strategy, which is markets that work for people, just as you said as well. Therefore, we welcome the retail investment strategy that works for people, and it will stimulate pan-European capital markets. Just to make sure, I'm not here to make a Dutch point. If I want to make a Dutch point, I can stay in the Netherlands. I'm here as a European, and I would like to make a European point to you, which is very close to my heart. There's 2 points I would like to make. But if you want to remember only one, please remember the one that if you want to make markets work for investors, please support an inducement ban, a full inducement ban for investment products. You can skip all the rest. Just remember this one. But I promise you 2 points, and I will elaborate on this point. In order to retain the strength of our EU capital markets, it's important that cooperation between supervisors as myself is improved. Digitization has diminished national borders even further, while supervision is still carried by national supervisors like myself. We have different legal interpretations and supervisory approaches. We'd like to be this different, but this is still the case today. Operationally, so in practice, it is difficult for home supervisors to adequately supervise institutions doing cross-border work, cross-border business, and enforce them against infringements. Sometimes countries can be quite far away, even within Europe. We believe that increasing some form of host supervisor competences, so someone who's doing business in your country, should be increased to guarantee the success of the European retail framework. So this was the other point. I'll come back to the main point now, because we also understand that there is a lot of discussion about whether the strategy and proposal should include a ban on inducements. My message to you is that if we really want to put the interest of ordinary people in Europe first, we shouldn't think twice about banning inducements. Before I explain why, let me tell you 3 key features about our national ban. One, it has been in place for about 10 years. So if you're an economist or you read about economics and you like natural experiments, please have a look at our national experiments of about 10 years of an inducement ban. It has been induced following a serious mis-selling scandal, and I come back to that point as well, with insurance-based investment products in the Netherlands. 2, the current inducement ban does not prescribe how consumers pay for advice, only that payments from third parties for distributors are forbidden, so that advisors can always work in the full interest of the client. 3, we opted for a ban after implementation of lesser options, such as transparency. We've tried about 13 different versions of transparency, and believe me, it only gets you so far. They proved ineffective. The first reason why banning inducement favors retail investors is that product manufacturers, asset managers, and insurers have to start competing on quality and costs of their products, and no longer on who pays the highest inducement to a distributor. After the ban, just like Carol outlined, we saw ETFs becoming much more popular. If you tried to buy an ETF in the Netherlands in the 2000s, in the early 2000s, you had to search wide and far, and it was nearly impossible. And trust me, I tried. If you try now, it's much, much easier. Now we have the highest penetration, and this is no accident, we have the highest penetration of ETFs within Europe, together with, surprise, surprise, the UK, which also has an inducement ban. That brings me to my second reason. The ban erases any doubts about the incentives of the advisor. We know that inducement indeed creates a bias. It has been demonstrated quite clearly. If a broker or an advisor gets paid by companies whose products they sell, they will choose their interests over the clients. Sometimes this is deliberate, sometimes this is not so deliberate, but the effect will always be there. Just ask any psychologist how this effect works, and they can tell you quite clearly. Yes, Dutch consumers were initially quite a bit surprised about the price they had to pay for advice. You have to get used to it. But after a while, they were okay with it. And like Karel said, the market is doing fine. It is logical that inducements remove biases in advice. We have the same issues with doctors who are being paid by pharmaceutical companies. And you can see exactly the same debate there. The third reason that the ban has also proven to lead to lower costs, and this is an extremely, extremely important point. This is the result of multiple factors. First of all, more competition on cost and distributors that are incentivized in favor of the client. In the Netherlands, we now have among the lowest fees for retail investors in the world. Together with a couple of other countries that have a ban, such as the US, UK, and Australia. ESMA calculated that the average ongoing cost for UCITS equity fund in the Netherlands is 57 basis points, compared to 147 basis points on average in the EU. And you may think, okay, this is 100 basis points, what's the difference? It makes quite a difference if you take 30, 40 years. It's nearly double the investment you have. So it's the choice between having 30,000 for a consumer in 30 years or 60,000 for an average consumer over 30 years. That's the choice that's on the table. 1 percentage point per year makes a tremendous difference to consumers, which we are going to put first in the next retail investment strategy, right? Critics may say that the Netherlands is not really representative for Europe. We're a weird little country, left corner, loads of rivers, laying below sea level, never know what's going to happen. Aside from our inducement ban, we're indeed also famous for living below sea level. But my point is that we have 10 years of experience, 10 years, and we recognize some of the concerns. And together with our colleagues at the ministry and the sector, we worked quite closely to address those. And yes, we can address those also in Europe. 10 years after, the financial sector is still healthy and profitable. The small, the large, the financial advisors, the insurers and the banks, they're all still there and are doing perfectly fine. We have large banks, we have insurers, and 6,000 independent advisors. Retail investing has increased. From where we stand, a lot of the dire warnings, which I heard because I was around in the period 2008 to 2010, have not materialized and have been grossly exaggerated. Critics may sometimes say that the ban hurts retail investors by restricting the benefits of free advice. Well, let me help you with those two words. Free. It's not really free, right? It's rather quite expensive. You just don't see it. The Kantar study has found that the average inducement is about 0.7% per year. That's 45% of total costs. That's quite a big bite out of the total cost, and it leads to reduced investments. The second misconception is that free advice is advice or unbiased advice. In many cases, it's barely more than a sales pitch. No advice is in some cases better than bad advice. And I'm sorry to be so stern with you, and you can feel a bit of the emotion that I share with you. And this is because it's personal. I was around. I was there in the period 2005 to 2010. I saw the mis-selling scandal which hurt 800,000 consumers in the Netherlands. I have spoken to the consumers. I've looked them in the eyes, and I've seen that the situation has become much better with an inducement ban. And I really urge you, left, right, center, Commission or European parliamentarians, please support an inducement ban if you truly want to take the interest of consumers at heart. Thank you.
Thanks, Hanso. Very clear message, and of course, very clear experience in the Netherlands, not only, let's say, over the last 10 years, but also what happened before with the mis-selling scandal. And fantastic, let's say, that you put this well into perspective. Monique, of course, you have heard many things or things which you like, but you can add to this from a European perspective, how you see this as the head of the European Consumers Federation.
Yes, thank you. Thank you for giving me the opportunity to provide a consumer perspective, although a lot has already been said, so I might be a little bit redundant, but let me re-hammer it. Could I maybe start with a personal message to Marcel? Would you allow that, Karel? Yeah. Karel has mentioned that we have been discussing this since several months. I would say we have been working on this since the financial crisis in 2007. And my personal request to you, Marcel, and to your colleagues, of course, please get that proposal out as soon as possible. No paralysis by analysis. This is one of the topics that have been analyzed the most I've ever seen in my long life. All the arguments that, with all my respect to Nina, that have been used by the industry to delay or to block any ban on inducement has been debunked consistently, not only by consumer organizations, also by authorities and by reality. So please just get it out, because for the moment what we see is that there is a lot of letters being written, like Karel mentioned, official letters, maybe non-official letters, a lot of meetings taking place behind closed doors. I think it is now the moment to take your political courage, to take responsibility and to put that into the institutional framework. So all my encouragements not to be delayed anymore. We need this proposal, and I mean everything that has been said until now is just confirming that. And why do we need this also? And it has also been very shortly mentioned by Karel in his introduction. I mean, we are living in a cost of living crisis. People are under pressure, financial pressure, and people who have savings know that they need to save for after their retirement. This is one of the next crises to come, which is the pension gap. And the public pension system will not be sustainable. It will not be resilient. And the more any of the public crisis, the cost of living crisis going on now, will reduce public funding that is available in the future. So people will need to save for their retirement, meaning that it's even more important now than ever to have advice or to have products that suit their risk profile and their interest best. So it's even more important not to get biased advice. This is really very, very important. Speaking about advice, I would like to say already words, semantics matters. When you go to the grocery, you don't go to the tomato advisor or to the pasta advisor. You go to a seller. And in fact, this is not about advice. Somebody is selling you, like you said, Anso, it's about a sales pitch. So the fact that already you're being in a perception, in a semantic perception that somebody is going to advise you is wrong. It already puts you in a different relationship with your banker or with the advisor of the bank or the financial institution than what should be. They are just trying to sell you something. And that is, while advising is supporting somebody in taking the right decision for them. So it's really very important to get away from that myth that somebody at a financial institution who wants to sell you something is advising you, even if they have an obligation to take account of what is most in your best interest. Now, of course, for us, let's be very straightforward. You can imagine that we are in full support of a full ban on inducements, because we believe that inducements, an advice that is based on inducement is biased, is corrupted, is a conflict of interest, and it is certainly not in the interest of the consumer. And that is for us really something that was obvious, and we have a website on our main website, which is called The Price of Bad Advice, that demonstrates all the mass selling, mass scandals that have already taken place, where millions of consumers have lost millions of euro, or even before the euro time, due to, let's say, bad advice or corrupted advice. And this is only the top of the iceberg, because it's only the mass scandals that are being reported there. So the ban on inducement for us is something that is totally obvious, and it has not been for the moment yet instituted, established for in fact, the reason that there is huge lobby forces working against it. It's lobbying. And therefore, I already mentioned it, I think it's the time to have political courage and to go against the lobby by some parties of the financial industry. What I would like to say is that I have a mandate to speak on consumers, for consumers, from my member organizations in the different countries. A voice that I have not heard a lot in these debates, but to whom we have been talking, is the employees of the financial industry. I mean, I'm not allowed to talk on behalf of them, but what I hear from them, and you could double check with them, is they are very much under pressure because they need to achieve certain targets. Some of them are really in a, let's say, burnout or any of this type of really very difficult situations. And when I talk to their representatives, Uni Europa, for example, they say consumers have the right to receive good advice. Workers have the right to give good advice, non-biased advice. And that is something that is also very important. So, I mean, there are quite a lot of voices that express themselves in favor of a ban on inducement. And just one point I would like to make about the advice gap. I really insist on the fact that that's one of the arguments that is most used by the financial industry to say we cannot really ban inducement on advice, because then people won't have any advice. But first of all, provide simple products to people so they don't need the advice. And second, for the moment there is anyway already the advice gap, because what you think is advice is not advice. It's even worse because you think you're being advised. So, and there are other solutions to have also affordable advice. Speaking, for example, and now I'm working pro domo, consumer organizations can also provide advice that is affordable. So if you want a capital market union that works for the people, you need a capital market union where people can trust what's offered to them on the market.
Okay, thank you, Monique. Very clear view from the consumers organization. We now move to Nina, let's say, to present what the banks think about this. Nina represents the cooperative banks, but as I said, she worked for other banks before, so interesting to hear, Nina, what you want to add on this subject.
Yeah, that brings me in a great position here after the previous speakers really pledging for a ban. So thanks, Karel, for giving me the word, and thanks a lot to the S&D group for inviting us. That's much appreciated to sit today on this panel representing the cooperative banks, especially since our core customer base is the retail market focused, mainly SMEs and private households. In fact, cooperative banks serve no less than 240 million customers around Europe and who are potential retail investors. The customers of cooperative banks are also its members, and so the business model is focused on the members and clients and more on the long-term value rather than on profit maximization. And I can assure you, cooperative banks put their members and customers in their heart, not only the retail strategy. And we really would, and our members really try to offer best services to their customers and members. Yeah, and this leads to a focus on meeting on common social, economic, and cultural needs in local and regional communities, which requires inclusivity and proximity of cooperative banks to their customers. We thus find that the branch network of cooperative banks extend to even the remote areas in Europe. So our customers can also be found in very rural areas where the internet is limited or patchy. This far-reaching networks of branches also helps to provide services to customers who are not digitally literate and financially affluent. Yeah? Cooperative banks' values, especially the one of social responsibility and inclusion, guide cooperative banks towards giving the chance to all type of clients to invest towards their pensions, contribute to the green economy if they want to do so, and receive advice on where to best put their money. And we know from our members that this cannot be achieved without making it available the necessary infrastructure to do so in form of branches, advisors, and training. And the inducement-based advice makes this, amongst others, possible by socializing the cost that comes in these infrastructures across all kinds of investors. To illustrate what is at risk, I would like to quote some figures on the way in which cooperative banks' customers like to receive their investment advice. We have different kinds of studies going on in the recent year in 21-22, and this data from our members suggests that the majority of cooperative banks' clients presently take face-to-face advice for the investment choices, with numbers going up to 95 to 100% in countries like Spain, Italy, and even 80% in Finland, where the digital means are much more developed. And it is clear for us from these figures that an inducement ban will leave a large number of cooperative banks' clients unsatisfied, as robo-advice will not be able to fill the huge gap, and as well fee-based advice might not be accepted, especially by weaker customers. Even though we acknowledge the improvement, of course, that IE in general offers better advice, it cannot replace the human advice. And in fact, we also observe from the clients of our Dutch cooperative banks that robo-advice is still not that popular in the Netherlands, despite a usement ban, at least from what we heard. And this data, which I referred to, was collected during surveys with customers of cooperative banks on ESG distribution as well, showing that it is even more necessary at this moment in time to have access to investment advice. Europe needs retail investors to help finance the migration towards a more sustainable economy, especially that banks must implement sustainability assessment and product governance measures to guide clients in terms of their suitability preferences under MiFID II. And we cannot therefore stress enough how important it is to maintain the coexistence of an inducement-based advice next to the fee-based system to offer all choices for the consumer. And of course, the retail investment strategy is not about only inducement, we heard that before, but sometimes it seems that because this topic has been presented as a solution from some parties to fix a bunch of issues, which is definitely not the case. We need to fix all of that, what Marcel referred to before. So we certainly wish to say that this point in time, it is not the mean that the current MiFID II is perfect and that conflict of interests cannot arise. However, there is no strong evidence of a permanent failure of the regimes to customers. Yeah? As from what we can see, the mis-selling cases which were mentioned before by the Dutch authorities, they happened before 2018, when MiFID and the IDD came into full application, thus illustrating the robust legislative framework in this regard. And maybe finally to say that one improvement to this regime could be to standardize, and I just referred to what Marcel said, the quality enhancement across member states. But this option is probably not explored enough due to the political implication, and because it is not clear if there is supervisory convergence, at the very least on the quality enhancements measures. So it was referred to before as well. In any case, proper enforcement is important for us to look into. And maybe two other improvements which we find key is the transparency. Of course, harmonizing disclosure across products would simplify things so that the retail investor is not overwhelmed with all the information, for example, between MiFID and PRIPS. And the simplification of disclosure does not mean bypassing the suitability assessment of the retail client. We still think the necessary questions need to be asked, but there has to be a serious discussion on the way information is displayed to the client, especially now with several pages being added already at the pre-contractual level for ESG products distribution, for example. So, and finally, improving the sustainability finance framework due to challenges in terminology, complexity of language, and other needs for targeted improvements in law that should go in hand. So I wanted to bring these kind of aspects in the discussion as alternatives to improve the situation.
Thank you, Nina. Very clear point of view, also from a kind of a banking sector which is very, well spread all over Europe and attaches a lot of importance to branch networks and to the local presence. Probably before we open it up to questions, I would say to Jonas if he has some reaction, immediate reaction to what you've heard.
No, I was taking notes on what our colleagues said. And the debate is clear. You know? On the one hand, the industry thinks that the current model where the cost of the service are shared between the suppliers and part of the demand could work well. And I hope that the industry thinks that there is ways to reduce the conflict of interest that is already there in any case. And on the other hand, and maybe coming back of our colleagues from Netherlands, Hansel said at the beginning, there is not another way to eliminate the conflict of interest apart from deleting any kind of inducements in the market. As you know, the position of my group is clear on this matter, and the Commission is in a difficult position not to put its proposal on the table. What I expect from the S&D perspective is an ambitious proposal from the Commission side, because as our colleague Monique said, the consumers have to be in the center. And I would like to remind something that Monique said before. There are differences in the way that we define some activities, sellers and advisors. I think that the consumers have to be clear in which kind of activities they receive advice or they receive opinions from sellers, because it's clear that the activities are completely different. Because as another sentence that we use in other debates, if something is free, you are the product. And this is something that we use in other debates related with the digital markets. In any case, I think that this is more or less the summary of this first round, at least from my perspective. I don't see, honestly, how we could reduce the conflict of interest that is already there without a clear ban of inducement. I don't see how we could do it. And the conflict of interest, whether we can think on one side or the other, that's clear that it's there. And given that our colleague Karel prepared a very good paper on this matter, I give back to you.
Thank you, Jonas. I open it up to questions. I hope, let's say, we can have some debate about this issue. Who wants to kick it off? Who wants to raise points or also to make comments? Who wants to start?
Can I maybe react?
Or
Yes, I mean, maybe you can share experience because Nina mentioned the fact that you need to keep the branches open and that is being funded by inducement. I mean, I'm living in a country where branches are reduced dramatically for the moment, while there is no ban on inducement. So what would be the situation if there is a ban on inducement? We would not have any bank. Now, what I would like to say that this is quite an argument that is based on cross-subsidization. Why should it be a hidden fee imposed on an investor, sometimes a small saver, be in charge of funding the existence of branches or of ATMs with banks? That is something that needs to be introduced in the general fee that all clients of that banks have to support. That's the way I would see a fair distribution of costs and not a hidden fee or a hidden cost of a product with a consumer who is even not aware that they are contributing to keeping the branches more or less open.
if I don't see questions yet, if I can ask a question to Marcel and Hanso. If I read IDD and MiFID, as I said, for me, conflict of interest are banned. But why is it that only one or two member states in the past have interpreted it that way? But also, if I see one alternative is to have a very strict interpretation of MiFID, but then apparently there's a problem to make supervisors march in this direction. Marcel or Hanso?
Okay, I think the short answer is because the fact that you are being paid by somebody else does not per se and a priori exclude that you are acting in the interest of in the best interest of the client. So, but the reason why we are looking into this is not like in the Dutch case, as Hanso explained it. We are not triggered by a scandal or something that has gone terribly wrong. What triggers our reflections is more a structural problem, and we're wondering whether the incentive structures are right by having the best interest principle and at the same time allowing for inducements. So it's more that kind of reflection that we are having.
I think Marcel is saying wise words. I think why it's so tangled at this point in time is for the fact that there's no strong push from a clear consumer scandal currently within Europe. There was a strong push from a large scandal in the Netherlands. Interestingly, and therefore we topped up MiFID in a way, as the Dutch sometimes do, and therefore we based ourselves on MiFID, but we sort of added the own national option to take it 2 steps further, and I've explained where that led to. And so this was, yes, it could be a route to reinterpret MiFID. There could be another route where this is going to end. I was at a dinner with CEOs of large insurance firms a couple of months ago, and one of them, and we were discussing life as you do at such dinners. And I asked him whether he had any regrets, and in his work life he mentioned one, which was that he sold so many unit-linked products. He didn't turn into a Samaritan. The fact was that it made his work life miserable for 10 years. And it nearly ended his career. And the reason is because the amount of litigation we have had and the amount of compensation payments we've had in the Netherlands to rebalance this scandal has been enormous. If you do the math and if you look at the product characteristics of the products currently sold in the Netherlands, they look amazingly similar to the stuff we call the scandal. Scandals are very often defined some years later. When you're in the midst of it, you do not see it as a scandal. You should never predict the future because it's too uncertain. But I would take a good bottle or even a case of wine that there will be a session here within the next 10 years. We look back on this day and say that was the point in time where we could have ended this. And now we're stuck with this inducement-based massive mis-selling scandal in country X, Y, or Z. Trust me, it's gonna happen. We were all here in this room, and we have the power to change this. If we do not change it, I know the route we are going to take. I've been there, I've seen it.
Very clear, thank you. Nina?
Yeah, just maybe a question to the other panelists in this context. I mean, at least we can see that since 2018, we didn't have a scandal in the recent time since the MiFID and IDD came into full application. But of course, nobody can subscribe that there are no conflicts of interest that can arise everywhere. But I would say even in fee-based advice, do you think, and this just to say the difference to the other form of advice is that the current regulatory landscape does not have conflict of interest management rules in place, same as for inducements covered under MiFID. Do you think that, yeah, the conflict of interest would fade away in a fee-based advice system?
Very clear question. Can we, probably for Hanso, how do you deal with a fee-based conflict of interest system if you have unbundled product sales?
Yeah, I'll revert back to you to explain a little bit more to your question, because I'm struggling sort of where would the conflict of interest lie. But first of all, if you pay for your advice, I was thinking about your previous point on you're in a rural country, right? You're in a corner, a beautiful corner of Europe. Someone dies in your family. You get 20,000 euros, and you take the bus to the physical advice. There's 2 options: either you have an inducement ban or you don't have an inducement ban. Okay, same 20,000 euros. If you have the inducement ban, yes, you have an extra hurdle. You have to pay. Same type of money you have to pay when your central heating breaks down, right? A couple of €100. You go to the advisor. He or she advises you a low-cost, well-spread investment fund balanced between equity and bonds. Fine, that would suffice, by the way, for like 90+% of consumers in the Netherlands and in Europe as well. And then you see markets go up and down, and you've paid once, apart from a little bit of management fee, maybe 300, 400 euros. If you would go the other route with inducement bands, you would pay 200, 250, 300 euros, same amount, sort of less, but annually each year. Then the interest on interest effects kicks in, and Karel can show you the graphs on what the result will be. It's quite a big gap. That's where the difference, which I explained in my opening statement, between the 30 and the 60,000 euros comes from. This is the effect. And so let's not hide it. This is where it is. Is there a remaining, that was your question, is there a remaining sort of conflict of interest? I struggle to find it, but maybe you can help me a bit.
Yes, Monique?
I mean, there can always be bad and good advisors. But I mean, at least the level of conflict is taken out of the conversation, and the client is the consumer. And they are working for the consumer. They're being paid by the consumer. So they are, it's like your practicing lawyer, your barrister. They are working for you.
Yeah,
There is
and they're, yeah, of course, and they're better and not so good lawyers. Yeah, life's hard.
I had a question. Yeah, there is a question in the audience. Yes, I see. Yes, please, if you introduce yourself and...
Yeah, thanks, Karel. Joost Mulder, coordinator of the Retail Investment Subgroup of Financial Services.
A bit louder, Joost. Yes, we don't hear you so well.
So, is it okay now? Yeah. Joost Mulder, coordinator of the Retail Investment Subgroup of the Financial Services User Group in the Commission. Recently, I think we've all seen political statements, including from the responsible commissioner, moving slowly away from strong statements about an inducement ban, a full ban, towards something that I would paraphrase as ensuring access to bias-free advice, which I think everyone here will understand is not the same thing. But I'm wondering, how can such an independent advice survive in a market that is still full of inducements? We see this in Belgium, for instance, where I think we have 5 independent advisors. In Germany, it's better. We have 17 or 18, slightly bigger member state as well. Who are their clients? What do these clients end up buying? Is this really a very specific niche part of the market? I took some of that advice 5 years ago myself as a Dutch citizen resident in Belgium. It's a stupid thing because I knew I was paying twice. And this Belgian advisor, one of the independent advisors that is on the FSMA website, suggested that I try to play around the rules and buy Dutch ETFs. In the end, I was not able to do this because I'm a Belgian taxpayer, Belgian citizen, and of course these markets are compartmentalized. So who on the panel actually believes that, you know, improving access to biased-free advice is going to create a fair market for these independent advisors, that we're going to get 500 or 200 in Belgium instead of 5?
And if I can add to that, thanks, Joost, for an interesting question. I thought that MiFID obliged providers to deduct the retrocession fee if you pay already a fee separately. The MiFID rules. Of course, if they are correctly applied, and then you have to, as a consumer, be able to check this. But the inducement, which is normally half of the cost of a fund, should be deducted if you pay separately. But anyway, Marcel or Hanso or Monique can reply. Or Monique, you start?
Okay, thank you. I wanted to speak about the space between, you know, like bias-free advice, whatever that means, and in competition, give the consumer the choice. But this is quite theoretical, because if you are going into behavioral economics, the consumer is driven by the price signal. And if there is something that is presented as free, he will always be, his first reaction will be to go for that one, unless he's very well educated. But and that's something that we are not going to wanting to go into, because financial education for investment services is a very huge investment without proper outcomes, because people cannot spend their lives trying to follow how investments are being designed. And so there is not enough space, in fact. There is not enough market in a society where there are still inducement allowed. There is not enough a market for free, not free, for independent financial advice. And that's why we need to get rid of the inducement, because it's, in fact, exploiting the behavioral biases of consumers.
It's like the same, like with independent equity research, which we haven't seen coming up either, let's say, which is the other kind of inducements which we discussed within MiFID. Hanso, or?
Very briefly, I see it as 2 stable systems. And so the with inducement system is stable in itself, and you can see by the power of some organizations which try to withstand any change or any meaningful change, that it is indeed a very stable system. Having a market without inducements is also a stable system, but it's very difficult to near impossible to mix the two. And so it's just like in behavioral economics or in biology, you can't sort of mix the two systems. And why the debate is so heated at this point in time is because we have a leverage point where we can move from one system which has worse outcomes for consumers to another system which is not perfect, which has its downsides, but which is much better in the long run for consumers. This is the moment.
Yeah, maybe just to add to what Monique said, for me, a key element in the entire discussion is as well, and that I really hope to see as well in the retail strategy, is the financial education part. Yeah. Because as you said, okay, if you have a not well educated consumer, it would say, okay, I don't see maybe the hidden cost involved or something. But in general, if you want that the average consumer who is not well educated maybe to really invest in a pension scheme or in other models on the capital market, you really have to put your eye on it, not to exclude them for asking for advice, be it fee-based or commission-based or whatever, yeah? We have to start with the financial education to really show them that they have to take care for their pension scheme, that they have to think about how to invest their money. And that is really an element I consider the retail investment strategy should start with, to have really well-educated consumer. Yeah, that is just one thing. And maybe just as well by Joost, and it was mentioned here before, the topic of ETF. Yeah. I noticed well that the amount of investments in ETF increased since the Netherlands has experienced the ban of inducements. But coming from Germany, I know as well that the market penetration in Germany with selling ETFs is also quite up, even though we don't have an inducement. So I'm not sure to what extent there is a correlation between the ban of inducements and having the access to the ETFs. And secondly, just maybe to stop with the rhetoric that the ETFs are always a perfect solution. It is true that there can be a well-diversified passive ETFs invested in less risky markets, but there are also many ETFs, yeah, that are extremely volatile and not suitable at all for the consumers we have in mind, the average consumer with not so much money to invest in, especially to make up for their retirement. Yeah, they are often, in many cases, the assessment of client suitability by cooperative banks, and that leads to retail clients not making the target market for ETFs. Yeah, so even if the ETF could provide a cheaper alternative for retail investors to access the market, they might not match for the vast majority of retail investors. Just to say it in the discussion about ETFs. Yeah, to be fair.
At the back, I mean, in the middle at the back, yes, please. Some there.
May I go ahead?
Yes, please.
Okay, so my name is Brian Coughlin. I'm also with the European Consumer Organization, but I wanted to comment on the ETF question out of my experience previously with the German Consumer Organization. And the market penetration of passive investment products in Germany is in large part because consumer organizations recommend them in independent advice. So we provide guidance there, not full advice, but consumers are directed also by magazines like Stiftung Warentest and so forth to such products whenever it benefits them. So this is a very different offer because consumer organizations work for consumers, and that's how you get that result. In terms of what is suitable for consumers, if consumers receive adequate advice, they will receive the products that match them. Those can be ETFs or other products. But if there was competition for product quality in the market, which we currently do not have, then other products might actually be better designed, and we could have better alternatives. So I think this point is fairly mute, to be honest. But on the final point, which I believe was not addressed yet, is on the small-time investors. So if you are fairly poor but you can save, let's go with an example. If you save 100 euros a month and you do so for 40 years, then you save 1,200 euros a month, and then it's, I believe, 48,000 euros a year in total. Take 5% sales commission on that, and you're already 2,500 euros in the hole. It will take, and those will be deducted at the beginning. Yeah, so you will be negative on your saving as a small-time investor for 10 years or so. And then you're still stuck with the annual fees of your total savings, which will hound you forever, and you will be stuck with an inferior product. So if you had paid for advice immediately and paid, say, 300 euros, which is a lot, because you probably didn't need that much, then you would have been, even as a very small saver, much cheaper very quickly. Thank you.
Okay, I think there was another question there. Yes, please, have you introduced yourself?
Thank you very much. My name is Salvador Antunes. I work at the Portuguese PermRep. For that reason, I have to make a disclosure that the questions that I'm going to make are my own personal questions as we try to understand this issue, since as a member state, we don't have a position. But my first comment would be I hope that the retail investment strategy is not consumed as well by this issue of inducements. There are other issues such as how information is presented on digital platforms, which are also equally important, and the cross-border sales of the internet. So I hope this is not a black hole which we all fall into. But my question to Mr. Haag would be the following. First is, what is the percentage of retail investors in Europe that actually recur to investment advice for their investments? Because, for example, in our member state, only 8% of the workers of a bank are qualified to provide investment advice. So it's not the main gateway. And if this is not the main gateway for retail investors to invest in the EU, if it's not investment advice, maybe we need to look a bit to the issue on another perspective. Then my second question will be, why would a ban on inducements lead to an increase in investment advice in countries where investment advice is already particularly low? And then my third question is, we've been talking a lot about the UK and the Netherlands, which are great markets, work very well, they have amazing things, and there are many aspects an example to follow, but the economic realities among many member states is quite different. You know, we are a country where a large percentage of the population doesn't make enough revenue to pay revenue tax. The average investment on a product is around 1,000, but closer to 1,000 than 1,100. Huh? So why would a country such as ours see the same benefits as the ones from the UK and the Netherlands, which are much highly developed markets and much higher developed economies? Thank you.
Okay, very pertinent questions. Probably you take the third one, and then we go back to the panel. Yes, please.
Thank you. Mathilde Nonon from the WWF European Policy Office. So thank you for the insightful discussion. And we, of course, support fully the inducement ban, but we believe that many other elements will need to be taken into consideration, echoing what has just been said. And so I was very glad to hear, for instance, Madame Goyens mentioned the consumer's right to receive good advice. And we're talking about consumer literacy, but actually recent research from the Degree Investing Initiative, for instance, shows that a significant portion, 53% of financial advisors lack sufficient knowledge regarding sustainable finance concepts and green financial products, with significant disparities between countries. So to address this issue and ensure that sustainability preferences of retail investors are properly integrated by financial advisors, because they're required under the MiFID Delegated Act to take such preferences into account. Will, for instance, sustainability training be required, as it was already committed in the renewed sustainable finance strategy? And then, so I was very glad to hear this point about the right of consumers to receive good advice, but also to have access to clear, concise, and standardized information for them not to be drawn with everything that they hear. And I heard you, Mr. Haag, mention also review of PRIPS. So we know that 60 to 70% of retail investors also want to invest sustainably, but this remains very challenging for them to do so in the current EU framework. So I would be very interested if you could also explain how the PRIPS regulation, PRIPS review will address this challenge. You know, it was also recommended by the ESAS, for instance, to include a section on sustainability in the key information document. Is this something you're considering? And yeah, so general insights on how sustainability considerations will be integrated in the package. Thank you.
Could you remind me of your affiliation? I didn't get this. WWF, yeah, that's what I thought.
WWF,
Okay,
yeah.
thank you.
I guess I should. Let me start by your questions. I cannot give you a number. I cannot give you a number. I would have to make it up if I had to do it top of my head. But it doesn't surprise me that you know, the independent advice is not the main channel for retail investment decisions in Portugal. I would assume that it's similar in other member states, but clearly the reason is that we have a system of inducements currently in all but one member state. So the fact that
the 8% that I give you is advice to cour, independent or not. So in the banks themselves, only 8% of the staff are trained for advice. So the probability you go to a bank and they provide you advice as a retail investor in Portugal is very, very low. Independently, if it's we have banks that are not even authorized to provide investment advice.
So the question is, there is hardly any kind of unbundled advice in Portugal. Meaning, or the likelihood that the consumer will pay for advice in Portugal is very low.
What does it mean?
I mean that the likelihood that you will go to a bank as a retail investor and they provide you an investment advice service is low, because the number of staff that they have trained for that service is very, very low. So for example, when I went to a bank for my own investments, I got recommendations. I didn't get investment advice, and my bank wasn't even authorized at the Securities Markets Commission to provide advice. So it's not the main channel on how retail investors in Portugal invest today. So the investment gap that anyone that is being talked a lot, in our country, for example, it already exists because it's a service that retail investors are not accessing it.
I mean, yeah, the question is how to deal with the advice gap.
Yeah. Yeah, I guess that leads to your third question, which is a good question and a pertinent question. How to deal with an advice gap for, you know, the really small time investor? And here, I mean, the easy answer would be to say, you know, would it not be for those who are offering these products to come up with solutions? But I think so I believe that there is a role for the market here. But I also think that regulators can help, and here a possible solution is to develop very simple forms of, you know, simplified advice that can be provided at a low cost, also for investments of very small amounts.
Okay, probably turn to Hanso.
Yeah, to to the same point, in Portugal, yes, Portugal and the Netherlands are in many ways different, and in many other ways also similar or same. My point was not to hold the Netherlands as a shining, bright example in Europe. We have our own issues and our own stuff. I would not recommend the road we have taken to you. Actually, it's more or less the opposite. There's two things I would like to say to you. One is you have a wonderful opportunity to do better than we did. You have a wonderful opportunity to not get stuck with thousands or nearly 1 million of consumers who felt ripped off, and with a long-term bump in confidence in financial markets. There is a better way, and you can take the better way if you decide to do so and lobby on the right side of the argument. So there are many things wrong in the Netherlands, and you can do better. If you are a poor consumer, or a relatively poor consumer, or a small investor, and you have a small amount, say maybe €1,000, as you mentioned, the issue of costs is even much more important. Some of the costs are fixed, and some of them are variable. Variable doesn't really matter. On the fixed ones, you take a bigger chunk out of your €1,000. You really want to make sure that you get as cheap advice, standardized advice, as Marcel was saying. Let me give you another trade secret, which I'm going to spell for you. Inducements lead to a very high cost structure for the entire industry. And so the entire structure is much more expensive if you're inducement run, because there's less competition on cost and quality, like we said in the opening statements. If you take away the inducements, you can see that there's going to be a push on the costs of providers. So their excess cost is taken out of the supply chain, and this leads to cheaper products in many different places, and this could also be the case in Portugal. I hope this at least partially answers your questions. To an earlier point, ETFs are not holy. I agree with Nina. I used a trigger word, which is also my mistake. I said ETF. They come in many different size, shapes, and form. I agree with Nina. My point is that the fact that you pay inducements rules out basically the best ETFs you could have, or at least the low cost, the passive ones. I wouldn't say best, please edit it out. The ETFs, which in many cases help consumers the most. And the reason is, if you're extremely low cost, you cannot pay inducements. And so therefore you deprive consumers of low cost ETFs. And yes, there are silly ETFs and there are volatile ETFs, et cetera, et cetera. I agree with that.
Monique?
Yes. Thank you. I was going to make the same point about small savers. I think that the less affluent people are, the more important it is to protect them against biased advice. That's for sure. Second, I wanted to make the point also on linked to what Marcel mentioned about how can we provide for the future system about financial education. I think that one should not put on the shoulders of the people to mitigate, to compensate for a system that is wrong. The system is wrong. It is biased. It is fueled by bias. And then don't change the people, change the system. And changing the system is banning inducement. It's also making products simpler. And certainly when it comes for small savers, you don't need very sophisticated constructions in order to get some return on their investment. And third, of course, the ban on inducement is what we have been talking mostly about today. Having a ban on inducement in the proposal will be a very important step. It will not be the only one. Of course, we need trustworthy advice, meaning more qualifications for advisors, for example, and that's part of the whole story. But we wanted to insist on this being, in fact, a fundamental bias of the system that we should get rid of.
Nina?
If I just may reply, but I didn't insinuate that making the consumer more capable to understand the financial surrounding the markets, their options, shall replace any discussion about avoiding conflict of interest. I think it's just a different layer which could add up to making consumers stronger, and that it's certainly in their best interests not to change them, but to educate them, yeah? Just to giving the confidence that they understanding as well the setting they are investing their money, that they learn about retirement, the risk, whether the pension is enough or not, whether they shall take care. I mean, you were insinuating that one shall replace the other or something. it's really different things, as we said before, and we heard it as well. There are a lot of different things in the retail investment strategy which can improve the situation for the retail investor in Europe. And maybe just as the word competition was brought up before, so in my opinion, beside the question of inducement, when we might not be on the same page here, but I see different issues which were mentioned before here, which really can improve the question of competition. It's the transparency disclosure harmonization, which will allow the investors to more easily compare the costs and charges related to advice and non-advised sales as well. And even non-advised sales, we were speaking about as well consumers, and I really will get back to my Portuguese member as well to ask about how the situation is in cooperative banks. What was I going to say? I just forgot what I wanted to say, but another thing which is key for us as well, to come back, and it wasn't really mentioned before, to come back to how we can really make our consumers competent on sustainability. Yeah? That wasn't really mentioned before, but in the discussion, that's as well a key element. We see a lot of interest from our clients, really, and at least I can speak for cooperative banks. They are issuer of green bonds, and of course you need good advice to understand the product, but that really makes it even more important to increase the level.
But for green bonds, you need to have standards.
Sure, but we are working on it, yeah? That's a different work stream. We have, Marcel Haag is competent for a lot of things, but this is certainly as well something which is part of the sustainable strategy, yeah?
Marcel? Yes?
I would like to react to the question from WWF. Indeed, we are looking, when we are looking at the information that is disclosed to retail investors. We are also looking at how to better incorporate ESG related information. Of course, always bearing in mind that that we would also like to address the issue of an overflow of information, which is, burying the relevant information that the retail investor is looking for. But we would agree that ESG-related information is something that many retail investors are looking for. So we're considering how to best deal with that.
Okay, thank you, Marcel. We're close to the end. If I could add one response. I know there's one question here, very briefly.
Yes, my question is for co-legislator. I'm really personally astonished.
But who are you, please?
Ms. Scacchi from European Service Banking Group. I'm astonished to hear that 10 years from now, just a ban, just a measure, brought all these positive things in terms of competition and reducing of costs. I cannot believe that in 10 years you just put a ban and everything worked wonderful. I expected that in 10 years, even a Dutch supervisor did a lot of efforts and jobs and activities to enhance competition and reducing cost and even enhance supervision. So to me, it's really hard to understand why something that proved worked well in a country of 17 million of people can work well for a geographical area made of 700 million of people. We all agreed that the market is fragmented, that the countries are different, that supervisor activities, interpretation are different. So how the Commission and the Parliament can be sure that something that works well in Netherlands can work well on all Europe? Europe is diverse. banking, financial activities are diverse among the countries. So to me, it's really too simple to say one ban, just one measure will bring all these wonderful things. I agree with the audience that improvements are made of a lot of measures, different approaches, and different means, not just a ban. Thank you.
That's more a comment, but I don't know, Hanso wants still to comment on that?
No, I don't think the Netherlands is wonderful in many things. I focused a bit on the inducement ban for a specific reason. I think it's not just an ordinary measure. It's a very important measure because you're tinkering with the system. You're tinkering with the incentive system, and that doesn't happen that often. And like we said before, you can't sort of mix two different incentive systems too easily. And so that's the reason why I focused on the inducement ban. I also told you that we improved quite a bit on the transparency side. You can see some improvements as a result of the transparency, but it is limited. It doesn't address the fundamental issue, which has to do with basic human psychology. People who read the papers and read the investment advice usually don't need to read the investment advice, because those are the people who are very well educated, willing and able to read very, very clearly and take very, very clear decisions. And sometimes even they are fooled, if I understand Joost's comment correctly. So there is a limit to how far you can get with transparency. So therefore, I didn't focus on that. Yes, I agree that the digital world is changing, and therefore, within the retail investment strategy, it's important that we address that. There are many other things, but for me, because there is such a switch in the road, and so you can go one way or the other way. And that's the reason why you're here to speak me passionately about this, not to hold you up the Netherlands as a shining example. We are fine. We have the inducement ban. I can go back home on the train and be happy. Don't worry about it. That's not the reason why I'm here. I'm not here because I'm Dutch. I'm here because I'm a European. I worry about the poor consumers in Portugal. I worry about consumers in many different European countries, that 10 years from now, we will have a mis-selling scandal, and we will look back at this day. That's the reason why I'm here, and that's the reason why I focus on this. This is an important measure. No, it's not the only one. No, not everything will be fine and dandy afterwards. It took a lot of work from the industry, by the way, from the Ministry of Finance, by the regulators. But yes, with a lot of effort, you can come to a better outcome. Thank you.
If I can add, because the Portuguese example, and we forget the Spanish example of mis-selling, which was very widespread after the financial crisis, would probably not have happened if we had a ban in place. I remember once I came for a conference of your Portuguese market supervisor, and the big talk was the convertible bonds, which had been bought by very uninformed investors. The same happened in Spain. And if we were to have got a ban in these countries, probably it wouldn't have happened. Anyway, it's a final comment, but I pass the floor to Jonas, who will conclude this because we're over one. No, Nina wanted to have a
maybe just to say, but just to refer, due to MiFID, we have MiFID in place, we have PRIPS in place, IDD in place. I mean, a lot of improvements have made, and I think just from our perspective, to make the entire system better, of course, there are options, but with improvement of transparency and disclosure harmonization, in our opinion, you could achieve already a lot, and leave the consumers a choice at the same time.
Monique wants to add a point, but very briefly, and then we need to conclude it unless Marcel still wants to add a point. No, Monique first.
I was not prepared on MiFID, but scandals take time to materialize. You need the time for this, for people to invest on basis of the new legislation and to be aware that there is a problem. So this doesn't happen overnight. So it takes time. Though this is brewing, and then it really explodes at a given moment.
Marcel, no, or otherwise I pass the floor to Jonas to conclude.
Look, I mean, so many comments have been made on the multitude of items that have to be addressed. At the Commission, we are very much aware of this, but there's one thing that I would strongly warn against, and that is play one aspect against the other. So, financial literacy is very important, and we should work on this. At all levels, by the way. But we should not say, you know, this is fixing all other problems. And the same is true for the many other aspects that were mentioned.
So with this, we pass the floor to Jonas for a final word.
No, thank you. Thank you so much. I think that we attended a very passionate and interesting debate. I would like to remind that the motto of the European Union is united in diversity. And it's true that there are different national or regional characteristics, but at the end of the day, we need to protect the single market and also in the capital and in the banking activities. I don't know if there will be scandals or no in the future, but even if there is not any kind of scandal, we need a strong and independence and resilience framework, regulatory framework. And it's clear that, as I said before, if something is free, the product, you are the product. We need a market with more transparency, of course, where this kind of inducement or conflict of interest could be removed. And maybe if we have to give any advance to the small savers, that this is something that there has been in the atmosphere, I would like to remind that the banking union is there and the deposit remains as another option. Yeah? So sometimes we try or we think that we need to incentivize people to participate in the capital market, and I think that we have to do it if we really want to have a European capital market union. But it's also true that in some cases, deposits, I would like to remind, is a good option, yeah, for some kind of clients. And this option should be to remain there, yeah, on the table. So thank you so much, please.
Thank you, Jonas, and thank you, Hanso, thank you, Marcel, thank you, Monique, and thank you, Nina, and thank all of you for a fantastic panel, and thanks S&D for a fantastically organized event. So there's a lot of interest, so thank you.
There's a lot of people.